you did a separate T account, it's a separate sheet, like the T account, for each account. So it's the same thing, you're doing the same thing, the only difference is you're putting it on a sheet of paper instead of on one little sheet. So, the third step in our accounting cycle is to post from the journal to the ledger. Alright, this is the process called posting. Another new word, what is posting? It is transferring the information, taking the information from your journal and putting it in each ledger account. Okay? So we had that transaction, let's do one. It's step 3 in our process, right? We analyzed, we journalized, and now we're posting to the ledger.
Posting.
Ledgerizing. So we're posting. Okay. Alright. Here's an example of what your ledger account is going to look like. It's going to have the name of the account. It's going to be a little separate sheet. The name of the account and the number of the account. And you're going to date it and start your dates just like you did in your journal when you start a ledger page. It starts the year, month, and date. And here, under posting reference, you're going to put where you found the information to put in your ledger. The J stands for the General Journal, page 1. So this means that you got this information from the General Journal, page 1.
So it's always going to have a J in front of it.
If it's the General Journal. We have other journals later, but right now we're dealing with just the General Journal. Accounting's like chemistry. Or worse. Accounting's not an easy subject. Right. But once you get it, once you go, it is, once you get the first little bit ingrained in your mind, then it is. It's really not.
Everything builds from there.
Okay, so you're going to put your posting reference, which is your General Journal, page 1. How much was it? It was a debit to cash. Here's your T. Da-da. Da-da. Right there. What do you do when you increase an asset? You debit it. So the debit side is going to get the entry. And instead of waiting till the end to add up our columns, we just keep a running balance of our accounts. So what we do is we go over here to the balance section and just go, okay, well, we've got a debit balance of $10. And we just keep up with it as we go. All right. So that's an example of your ledger. Got the account name and number, columns for the date, the description, and the posting reference. Columns for debit, credit, debit balance, and credit balance. Okay. Now, if tomorrow we wrote a check for $20,000 and posted it, then the next entry here would be a credit, right? And since that's a credit, you're going to subtract it from this balance and now have a debit balance of $80,000. Okay, so we keep up with the balance as we go down.
I have a question. On this ledger, do we put the description like we do?
No.
We don't? Just the journal?
Right.
Okay.
You don't have to put your description simply because when you refer back to your journal page, this is the auditing trail. So what it is it's referring back to where you see it right. The only time we put descriptions in there is when we do something at the end of the month, which we're not to that yet. But no, you don't have to write your descriptions. Okay. A little bit easier, huh?
Yeah.
A little bit less writing. Okay, so, alright, there's 5 steps in the posting process. You must follow these steps. You must follow these steps. Step 1, go to the ledger form, you enter the date of the transaction that you're going to be recording from the journal page. It should match the date of the transaction on your journal page.
Is this in our book?
Yes.
And
Page.
everything should be, all of this, yeah, it should be in your book. I don't know what
Page 100.
Is that on page 100? On page 100, okay. So you enter a description of the entry if necessary. Well, you don't have to if it's a routine entry. So on these that you already have a description written for, you don't have to rewrite the description. So you enter your date, right? That's the first thing you do, the date of the transaction. Step 2. Then on your ledger form, you put what page you got that from. So what was the page of the journal? You're going to enter that in your posting reference. A J for the journal and then page number for the general journal. Okay, that's step 2. Step 3. You enter whatever this entry is. If it was a debit, you put it in the debit column. If it was a credit, then you put it in the credit column. Then you compute your balance by going on across. Either add it if it's a debit. You already have a debit balance and it's another debit, then you're going to add it to the debit balance, which is the normal balance for an asset account. Or if you had written a check and you credited it, then you would subtract it and then put your balance in your debit column. Then and only then do you go back to your journal page and write the number of the account in the posting reference column on the journal page. Then and only then, only after you have done your posting. When you write the number back on your journal page and that show that you debited something or whatever it is, then you are verifying, that's your signature saying, I went and did it. If you didn't go and do it, you don't put a posting reference, right? Only actually follow these 5 steps. Okay. So let's look at it. Here's our entry. General journal. We got page 1. We've got an entry. We bought some equipment for cash. We wrote a check. So we go first to the first part of the entry, which is the debit. Go to our equipment ledger sheet. Put the date in. Right? Where did we get the information? Journal page 1. We write in J1. What did we do to that account? We debited it for $5,000. Take our balance, calculate our balance in that account, and then we go back to the journal page and enter the verification that we have completed the posting. Okay. That's 5 steps. Okay. In our general ledger, which we've already covered this because it's your chart of accounts, it's going to show your assets first, then your liabilities. Thus, the need for the numbering, 100s, 200s, 300s, it keeps them in order in the correct place in the ledger. Assets, liabilities, owners, equity, revenue, expenses, 100s, 200s, 300s, 400s, 500s. Okay. And it speeds up your preparation when you start to do your trial balance. Okay. It just helps you out. If you have an error, sometimes errors are made. In this class, you may use a pencil and you may erase on your homework, but in real life, you must use ink and you may not erase or use whiteout, period. These are legal documents, and as you record it, you cannot change it after you've written it down. Right? That's what all the hoopla is about when they find people changing things, right, and taking money out of it. Okay. So we can't erase, we can't use whiteout. So we correct it, depends on how we correct it, depends on what we've done. Now, the only thing we've done is written it in the journal, then it's pretty easy to correct. If we posted it, that's a whole other story. So let's look at first if one has just been written in the journal and we hadn't yet taken it and put it in an account yet. We've just written it down. And we find it. And we say, okay, and remember, it must be done in ink and no erasing. Okay, so if it's before you posted it, on September 1, you had an automobile repair shop purchased some shop equipment for $18,000, and they bought it with cash. However, they were just in a hurry, and they wrote it down as office equipment instead of shop equipment, which was the wrong account. Everybody agree?
Yeah.
So, we're looking at our journal. How do we know we hadn't posted it yet? Okay, no posting records. So, okay, we can go in and we can fix this one. We can just have a neat line through it, write the correct account above it. Then when we post, we're going to put it in the right account. Alright. Okay. Then we go ahead and post it to the correct account. Now, after it's been posted, can't change anything, and then posting's been done, the entry's been completed and posted. So what you have to do is, you have to go back to your journal. No erasures ever permitted, no whiteout. So we go back. We didn't find it this time, same mistake. But how do we know we posted it? See, there's the numbers. Okay, we know we posted it, so can't correct it easy way. So what we have to do is remove it from the wrong account and put it in the correct account. Alright. So how we do that is we go ahead and debit the shop equipment, which that's what should have been debited to begin with, for the amount. And then we credit the office equipment, which takes it out of there, right? You wrote out that entry in the balance. So once you've done that, you've corrected it. You put your little note, we made an error, and we had to make this entry to correct the error. Okay. But when you do your reports and all that, it's going to be all right because that ledger account is going to zero out the amount that you did wrong. It's not going to show up in there, is it? Everybody got that picture in your mind? Okay. Okay. So now we would have it and it would be correct. Okay. So, okay. Turn the light back on. What we're going to do, you're going to do your assignment. What you're going to do on this problem that you've got to do, which is